Hey, we're live. How's it going? This is Walter. I'm one of the co-founders of Sacra. Um, as you can tell, I am not Adam. So typically, Adam hosts these. Adam from Sandhill. Adam couldn't be with us today. But yeah, at Sandhill, so Sandhill and Sacra are partners on these live events, and we do them almost every week on Thursday at 3 p.m. Eastern. Um, at Sandhill, they put on events. Um, they have a newsletter, which is great. Adam writes it every week, and they have a pretty big syndicate too. So it's a pretty big community of folks interested in private markets and startups. So you should definitely check them out. And at Sacra, we do research on private companies, and we publish that research on our site. Um, and yeah, and so we team up on these cool events for to talk about different topics and the things that are interesting in the startup ecosystem. So our guest today, we are talking to folks about investing for unaccredited investors. Steph Mui, she is the founder and CEO of PIN, Power in Numbers. Power in Numbers is a really cool and interesting platform for investing as a community. So, for example, there's a Y Combinator founders group powered by PIN, and they also work with business schools and that kind of thing. And Steph herself, she's GSB, Stanford GSB MBA, and she at GSB she started one of these investing groups, and they're backed by the best investors in the valley, including Initialized. So yeah, super excited to chat with her. And we also have Zehra Naqvi, who is an investor at Headline, and she focuses on consumer. And she previously was head of founder community at Republic, which is one of the biggest equity crowdfunding platforms. Um, uh, one of the biggest platforms for equity crowdfunding. So obviously a big platform for unaccredited investors to invest. But I want to bring Steph and Zara on because they can give much better intros. Sweet. Hey.
Oh, hello. Woo! Those are great intros.
Working through those slides.
Real sweat. No, that was perfect.
Yeah. No, thank you. You're too kind. So yeah, try to give a little intro. If we're super excited for this panel, try to give a little bit of intro. But Steph, maybe could you kick it off and do like a better intro?
Sure. It's hard to top, but yeah, the quick story is, I'm Steph. I started my career in venture capital, and that's actually, I think, what inspired a lot of this kind of like accidental road to building what PIN is today. You had mentioned my journey with PIN really did start back in business school, and the intent at the time was just creating this literal side project for our class, which was how do we get 400 of our classmates who are all excited about backing our other classmates the opportunity for them to invest when 60% of them were unaccredited. A lot of traditional fund structures also have caps on the number of people that you can have in a fund like this. And so for almost 2 years, we were working on some, again, solution for ourselves, really thinking it was going to be just for our class to start a legacy, and super proud that even fast forward to today, there's literally a new one of this fund that we started for every single subsequent class since we started it in 2020. And then obviously on the personal side, that is really what has evolved into PIN, my life's work and full-time company now. You mentioned we were backed by Initialize and NEA. We now work with all the top business schools, like schools of all sorts, company alum groups, accelerators, founders, et cetera, all who are using PIN to do something very similar to what we did, aka coalesce their communities together to invest in the startups, usually who are part of their community or have relevant expertise to what they're doing. And yeah, I'm excited to share more about that, but I'll pause there for now.
Sweet. Good stuff. And yeah, we met at a founder dinner. Good stuff. Yeah, New York City. Back the guys, from Prequel, introduced us. So yeah, super excited.
Great guys. That's great dinner.
Yeah, Zehra, please.
Yeah, totally. First, thank you so much for having me. I love doing anything that is talking about unaccredited investors because it is something that I care a lot about. Quick kind of background on myself. Basically, started my career more as a founder and an operator. I was fascinated in just being an entrepreneur. So, growing up back home in Hong Kong, started a company. It was just like an e commerce business, scaled it to profitability. By no means venture backable, but by the time I'd moved to New York, really wanted to understand how I could work at every single type of consumer tech, consumer business under the sun. So I would basically just ask founders constantly, is there anything I can do to help you? I just want to get experience throughout undergrad. And so I worked for like consumer social startups, consumer fintech startups that had raised no money, and then all the way up till like companies that had raised like 220 million. That's kind of where Republic comes into the picture. So I interned at Republic for a year during undergrad and joined full time. A really large part of my motivation to join Republic, an equity crowdfunding platform, really came back down to the fact that there's a lack of accessibility with investing. I thought VC was a very confusing, opaque world. Every founder I spoke to struggled with it. And so now I have unfortunately joined the dark side. I am a VC investor at Headline Ventures, but we love consumer tech and I love consumer in general. So I spent the last few years angel investing and I'm now here investing in seed to Series A consumer tech companies.
Yeah, that's awesome. Maybe we could start off with sort of like some context setting because, like, I remember, so AngelList, Republic, was spun out of AngelList, and AngelList was meant to sort of democratize, investing in some sense. But one of the limitations was this limitation on, you still had to be an accredited investor to invest. And then everyone was pushing for like the Jobs Act, and it came along and opened up, sort of equity crowdfunding, gave the opportunity for Republic. Maybe Zehra, could you maybe talk about just the kind of what it looks like, the equity crowdfunding for unaccredited investors, but the other sort of ways that folks unaccredited investors can invest in private companies today?
Yeah, so I think to your point, it is shocking to think it's both shocking and then understandable to think that I guess 8 years ago is really when the Jobs Act was signed. And only then, if you were an unaccredited investor, did you even have the chance to invest in a private company. And so it's still shocking to think about that because sometimes I'm like, who gets to decide like what we do with our money? And I guess the government's like implementing security protocols. And there's a whole other conversation we could have here to protect people. But essentially, when that change came into effect, the founder of Republic, I believe he was like general counsel or he was one of the lawyers at AngelList, and set out to start the company, founded Republic. And a huge part of that was to basically say, yes, you as an unaccredited investor, which I think is like net worth under $5 million or something along those lines. There's some arbitrary definition of what accredited means, which we can definitely get into. The founder really said, how can we give access to companies but then also not have it be a free for all. And I think that goes back to the idea of curation and selectivity. There was an idea that this could either be a market where there would be like tens of thousands of companies all fundraising. And I think it gets overwhelming to an unaccredited investor. How do you even make choices? I'm not a VC. Like, how do I even assess these opportunities? And so Republic was, I think, really the first equity crowdfunding platform to really double down on the selection process, mimicking the VC selection process. So when I joined Republic, I was an investment associate and we basically had like diligence, we had investment committee. So when we found a company we wanted to put on the Republic platform, we weren't writing necessarily like a check into the company, but we wanted to just make sure we could like do our diligence on it as well. So all of the investors on the platform had the information they needed. And so I think it was interesting because we were able to like kind of marry the curation that was necessary in VC and then also the like accessibility of just investing in a startup as an unaccredited investor.
Yeah. And Steph, around this time, you were starting your career in VC. You were at NEA, and then you moved on to GSB. Could you talk about how what made you excited about sort of one moving from, let's say, traditional finance into like venture, and then moving from sort of venture into trying to sort of into like sort of this space of unaccredited investors?
Yeah, totally. It definitely was very formative into how Pan even started because I think coming from banking East Coast to, Silicon Valley VC is a bigger culture shock than I think I expected. And I feel really fortunate for my time at NEA, because I think without that, professional experience, literally being forced to learn on the job, I would have been totally kind of out of my element. And I think actually that was like one inspiration for me when I went to GSB, realizing, 400 very talented classmates of ours were like literally in the middle of Silicon Valley, but still like the number of questions and confusing things that come up, accessibility around investing, et cetera, was still so prominent. And if that exists even for a cohort as lucky as, these folks who are literally kind of in the middle of everything and have all the resources they do, that kind of to me really struck a chord, and also made me even more grateful for the fact that, I was forced to kind of learn on the job itself, but actually kind of similar to Zehra. And we met actually because of our passion of kind of opening up accessibility to unaccredited investors. Again, we were kind of solving our own problems. It's never meant to be like a bigger movement, but I think one of our biggest observations was, our classmates, we would have 50 or so people of our class start companies every year. Let's say around 20 companies on average for each year. We explored everything from traditional fund structures, equity crowdfunding, et cetera, and just found that for our class, like forcing 20 companies to kind of go through this kind of equity crowdfunding process was not going to necessarily be the solution that worked for us. And I think what makes us different than kind of what Republic or other folks do for unaccredited investors is they're definitely kind of like an open marketplace, as you mentioned, for people who are kind of looking for opportunities. For us, it was like a huge community of people who wanted to support our community of folks. And we wanted to basically create something that made it as easy as possible for founders who naturally also had a lot of choice and have very competitive rounds and aren't going to deal with the extra logistics of setting up a channel just for specific people. How do we actually create an opportunity for or a structure rather that fits into kind of a traditional venture raising round as seamlessly as possible? And that's kind of what birthed now PIN and kind of the expansion there. But I think part of the reason why I became friends is just like our alignment on how excited we are about kind of increasing accessibility in this area and just hoping it continues to change more in the future.
Yeah. It's really interesting because, I'd love to hear, during the sort of the COVID era, this kind of, we're talking sort of like 2015 to like 2019. In the COVID era, things started to go kind of wonky and crazy. You had Robinhood, Wall Street Bets. At the same time, Republic raised at $1 billion valuation. Republic grew like this. And then you had these other products like, let's say, Party Round came out, and they, grew like crazy from a marketing standpoint. Questionable actual underlying traction, but put that aside. Can you talk about, because you both were kind of like in this deep, during this sort of COVID period. Can you talk about what that experience was like, and maybe any sort of key takeaways that you have from that time?
Yeah, go ahead. No, Zehra, you go first.
I was just going to say, I think that was the craziest time to have gotten involved in like even the conversation of like angel investing, equity crowdfunding. It was such a exciting time. There was so much money. I'm like thinking about it as if though this was a decade ago when it was like 3 years ago. Feels like a decade ago because we're in such a different environment now. But I think it's interesting because I think about obviously having been at Republic, we raised our Series A and our Series B in a matter of months from each other, hit like the unicorn status. And I think a huge part of the motivation and the ethos of Republic was always like democratizing access to investing. But I think at that time, this is also kind of when I transitioned to become head of founder community and then worked on growth. And I think for us, it was like spinning out of AngelList, we had essentially had a lot of investors on the platform who were already accredited, but they wanted to diversify their options with like non-accredited fundraisers that maybe their syndicate leads weren't putting up on AngelList. So it was interesting because I think we realized at a certain point, people who also, if we're going to make this burst the bubble of like the tech and VC ecosystem, a level of education and community has to go into, has to be part of this, because naturally when the market started going in a different direction, how could we expect people who were unaccredited to want to invest in private startups when at a certain point they might not even be investing in like the public markets. And so that's kind of when I shifted to like becoming head of community, because a huge part of it for us was about education. And spinning out of AngelList was like a great blessing. We had a huge user base of accredited users, or just users that were VC adjacent and unaccredited, but they knew how to assess opportunities. And so for the last like year and a half I was at Republic, which was post the insane 2021 high, we really doubled down on how do we actually reach net new users who don't know anything about private markets, like have never watched Shark Tank, and actually educate them on what these opportunities mean. Naturally, I think community is also like a superfluous word. It means so many different things to so many different people. But I think we really doubled down at that time thinking about, okay, we can't exist in this bubble anymore. We need to actually, like, if we're going to be category defining and continue living up to the unicorn status, we have to could expand to new users who need to be educated on what these opportunities might mean for them.
Yeah, for us, I feel like COVID definitely, people talk about kind of like the why now of when companies start. And I think COVID for us definitely was a huge why now. And I kind of mentioned, like I said, kind of the beginning of Pin, or Pin was never supposed to be a company. We were really kind of doing our own thing for our purposes. And funnily enough, I actually graduated from GSB working on a completely different startup, actually in the fitness space, which, classic peak COVID also stereotype. But it actually wasn't until, we had our kind of 2020 fund launch in June 2020, and we found that people of all sorts were reaching out, interested in kind of using our product for their purposes. And we definitely saw a lot of alignment, whether it's with people who were learning about investing for the first time via Robinhood, or, the DAO movement in crypto, getting people really excited about kind of community investing or new ways of kind of creating or like running organizations, even by like crowdsourcing different things, whether it's funding, but also like responsibilities as part of an org. I think all of that coalesced into us seeing like this organic demand, essentially, not only just from obviously not only our community, but even, business schools, which are very obviously tangential to us, but groups of all sorts. And that's really kind of what gave the inspiration and excitement to really push forward, and made us really believe that Pin could be a full company. And I think the other macro trend that really inspired us as well is I think people started to realize at some point too that obviously there's a lot to be gained from the public markets, from crypto, et cetera. But if you kind of look at historical returns, so much of it has been, capitalized in the private markets. And I felt like, especially around the democratization of access, whether it's through Robinhood or for crypto or whatever else, I think people started feeling excitement around the idea of being able to access this category that otherwise hadn't been able to be accessed before. So for us, at least, we noticed a lot of those kind of COVID trends kind of blending together to kind of create an awesome opportunity for us. And it's an exciting.
Yeah. And Zehra, you were sort of emphasizing the education component, and we've talked about community a little bit. What do you think of the statement, maybe that became sort of popular, during this sort of crazy era, but in the sort of like cold light of day? What is the statement like, everyone should angel invest? What is that? What's your reaction to that? Is it still like, yeah, or is it, slightly embarrassed that we might have suggested that?
I think I feel like, okay, I was never quite brave enough to say angel invest. I think I had been very cautious from the jump of ever saying something that it was kind of like everyone should, because I think it is like a privilege to be able to angel invest. It's like a privilege to be able to understand and observe trends long enough and have spoken to enough founders to be able to like ascertain and make decisions on where you should put your money, versus like public companies where we have like so much more information at our hands when it comes to making those decisions. So I think we're in a really interesting point in time, because for me, it's never a requirement of like everyone should angel invest, but I think it naturally does come up as you continue to invest like in the public markets and generate wealth. And I think VC and startups in the last few years have also, and Steph, I would love to hear you kind of speak to this. I think it's become this like job that for Gen Z at least has become very like, people find it alluring. Everyone wants to be a VC. They want to learn more about startups. And so I found that a lot of my friends who are Gen Z, like lawyers, or they're in pre-med, they're asking me about angel investing in like health tech companies or like legal tech AI companies, I think way earlier than early careerists would have like a decade ago. And I think that's just because there's an abundance, just so much more information about VC than there ever was like 10, 15 years ago. And I think the bubble has kind of burst in that sense. So for me, it's kind of a timing thing. I feel like ideally everyone gets to a point in their career when they can start thinking about like, what am I passionate about? What do I want to invest in? I started angel investing in beauty companies because that was something I had experience in the past and I felt most comfortable with. And then I slowly got into consumer fintech because of my time at Republic. And then now I'm investing with a lot more like of a perspective in consumer social because I've thought a lot about what I want to see exist in the world. So I hesitate to even say that I said everyone should. I'm sure someone could find a tweet and like cancel me where I'm saying everyone should angel invest. I'm sure maybe that was the sentiment in 2021, but I think now I definitely lead with the idea that it's a privilege to angel invest. I think it just takes time and different paths in life to get to that point when you feel comfortable enough to do so.
Yeah, I was gonna say I feel like I really resonate with that. Not that I feel qualified at all to speak to Gen Z trends specifically on NBC, but in general, we have noticed a strong alignment of like people wanting to invest, whether it's in people that they know, so people in their communities, or in areas where they have like a unique expertise or value for founders. And at least in terms of our inspiration for building PIN, that was what we saw as kind of the huge win-win, right? Obviously, not only allowing for unaccredited investors or operators in general to kind of access great deal flow from these companies. But on the founder side as well, how do we actually allow them to tap into communities of folks who can meaningfully help their businesses? And so in terms of, everything that you shared in terms of the trends that we're seeing or people's interest in it, like I'm personally really excited about that future of, matching more founders with relevant people who can help them and giving obviously everyday people the opportunity to get more involved and helping great folks too.
Yeah, Steph, I'd love to just talk a little bit more about community. We've kind of thrown the term of community around, but one is can you talk about the what enables folks unaccredited investors to invest on the PIN platform? Because my understanding is it's not equity crowdfunding; it's something else. And then the other is like sort of the centrality of the notion of community and what that means.
Yeah, that's a great question. So in terms of the logistics of what we are, I kind of mentioned earlier, one of our goals was how do we logistically make this as easy as possible, not only for the leaders that are, forming these vehicles, but also for the founders who are accepting this money. And so in our mind, our gold standard was like, how do we create something as similar to a fund or some kind of angel group as possible so that founders can kind of accept money alongside their rounds as per usual. Obviously, given all the regulations around traditional funds, that wasn't going to be exactly what we needed to do. But we ended up kind of iterating to something called an investment club or like a refined investment club, which allows for people to participate. And there's rules around the types of people who can participate. Unaccredited investors are allowed, but for example, certain states allow for them, certain states don't. So unfortunately, there are some states in the US that unaccredited investors can't participate from. Another example is like, a group has to have some strong relevance to each other and show some sort of sophistication. So like a random person, who joins our newsletter and wants to join in a random pin, for example, wouldn't be able to do that. And then the last is that there's a strong voting component as well. So they invest similar to a fund, in the same safes or alongside the same rounds, all that kind of stuff. But the kind of main difference between being, say, an LP in a traditional fund versus a member of an investment club is that there's visibility into the underlying investments and the opportunity to vote before an investment is actually made. And so that's kind of what our structure looks like. Functionally, it's very similar to a fund, and from a founder's perspective, also very similar. But those kinds of key differences in regards to how we screen and then also how investments are made and processed are kind of the key differentiators from like a logistics standpoint. And then kind of to your point on community, I think, community is a buzzword in many ways. I think for us, what we have found is people really do want to connect with folks who are like-minded, whether it's funny, it started off again, kind of really focusing on existing communities of people who knew each other in real life, whether they went to the same school or they worked at the same company or, they share the same profession. And now we're finding actually more and more groups of people who, maybe don't know each other personally. It's like they don't have an official title of their community per se, but they have a strong affinity with the people that they're investing with, whether it's like they're all doctors or a bunch of climate scientists coming together to invest, or a bunch of people who've met online via these games. They're really passionate about wanting to make gaming investments, for example. And what we found is like it's really interesting to see how like the cultures of those communities have really formed. The one thing I'll say is like universal is like really strong leadership and also vetting of members too. Like it's been interesting to see we have some communities on the platform that are much more open and allow almost anyone who wants to invest to kind of participate within, obviously the rules that we mentioned. And then others that are more curated and they vet for kind of like loyalty or engagement or all these other things and actually have like application processes and other kind of hoops to jump through in order to participate. And it's been really fascinating to see kind of the different cultures that emerge from that. I wouldn't say one's better than the other, but I'd say like a strong leadership team and the kind of intentionality up front over what they're there for and really kind of for the purpose of like investing together and serving great founders and learning together is always great at kind of seeing, the best communities flourish in that way.
Yeah. Zehra, Steph has sort of, sworn off Gen Z or knowing about Gen Z trends. You have a Gen Z related side project, what I understand. What is this a generational thing? When we talk about sort of Gen X versus millennials versus sort of Gen Z, and then maybe sort of like Gen Alpha, do we see like a continuation of the trend? Is Gen Z like actually like more excited about investing in startups, or is it or how do you see that?
Yeah, I think it's a function of, again, just kind of like how much easier it is to become even somewhat educated on topics now, even before we had TikTok. Like TikTok became popular. I'm on the older end of Gen Z and it became popular when I was like 19. And so I think about how now my like younger brother, he was around like 14 when TikTok became popular. And it's a lot more, I think, formative and disseminating information. So I think my favorite example that really, I think, contextualizes why Gen Z is perhaps a little more aware about like angel investing beyond just the VC kind of Bay Area bubble. When there was a hair care company that sold, I believe it was just a minority stake to a private equity company. And it was this hair care product that had gone like mega viral. It was like a hair oil that would just help your hair grow faster. And essentially, as soon as this news came out that they had sold a minority stake to private equity, like all the comments on TikTok, like just so many videos were made where it was Gen Z kids, like 18, 19-year-olds, even younger, saying now that they sold a stake to private equity, the formula is going to change. They're going to make everything cheaper. And I don't think 10 years ago, the 14 or 15-year-olds of a decade prior would have been able to like have that judgment or that assessment. And so I think because of that, there are influencers now who have gained their following from talking about being an angel investor and talking about being a VC. And again, 10 years ago, I don't think we really had like beauty guru YouTubers who were also talking about angel investing, but now we do. There are influencers who have 300,000 followers, millions of followers that talk about angel investing, talk about VC. So I think it's just a function of more information out there. And because of that, Gen Z is more aware of where their money goes to and how that affects the products and the companies they want to see in the world. I don't think that necessarily means like every Gen Z is going to be an angel investor, but I do think it just means Gen Z is a little more cognizant of like who owns the companies that they're purchasing products from and who are their investors, what's happening with the businesses. And I think that just level of awareness, especially at a young age, is just not something that you saw just like a couple decades ago.
Yeah. Steph, do you guys have Gen Z communities on PIN, or is it mostly sort of like professional or like your sort of GSB, your YC type communities?
Yeah, I'll be honest, now that I'm thinking about it, I think our groups skew a little bit older than Gen Z, but I mean, I've been trying to get Zehra on the platform with her for a really long time. So you teed me up perfectly for that to convince her.
Yeah, definitely. Yeah, Zehra, do you have a community that you should be making on PIN?
I actually feel like I should. We've talked about this forever. I'm just still learning the reins of being a VC and everything, but this is kind of to the point. I think it's interesting. I have so many friends who are not in this ecosystem, but they tell me they want to invest in the companies I'm excited about from an angel investor perspective. So I think it's such a unique platform. I love what Steph is doing with PIN, and I think there's a lot more that should and hopefully happen there from a Gen Z perspective. So we'll definitely continue the conversation.
Yeah, I'm curious. Do you often, Steph? Do you often get in these conversations? And Zara, I'd be curious what you think. Where it's like, hey, should I be making a community on Pin? Should I be starting a syndicate on AngelList? Should I be doing SPV with blank? And how do you how do you advise folks on these types of conversations?
Yeah, all the time. That's like the number one thing I feel like I'm always talking about. Yeah, I mean, I think, besides the very practical reason for us, which is like allowing for unaccredited investors to participate, I think our goals are a little bit different. I think I admire AngelList so much and the syndicate product they built, especially from a utility perspective. Like I've invested in more than my fair share of syndicates and RUVs and all that kind of stuff. So from like a utility perspective, I think they're, amazing investing class and someone we look up to in that regard. I think for us and why we feel differentiated besides the kind of unaccredited piece, like I mentioned, is our focus on kind of that win-win scenario I mentioned earlier. I'm a part of a few syndicates in myself, but I don't feel like it's a true community. And I know that that word is very vague, but it really feels kind of more like a more passive activity where, I can opt in when I want, I get these emails, they're interesting opportunities. It's definitely more focused on kind of maybe the utility of investing. Whereas I think where Pin is headed is kind of this win-win scenario of how do we coalesce communities? They're almost like extensions of memberships or group chats or alum groups that you would want to be part of socially, and also kind of obviously around the shared passion for investing. But also like, how do we actually unite community together in an engaged way to empower founders and help them in a meaningful way? And that had always been kind of the thing that had been missing for me with using AngelList and syndicates, et cetera. Even now as a founder, right, you have a very strong kind of relationship with the lead, but not necessarily the people underlying the syndicate. And I feel like that's a huge missed opportunity. The culture of syndicates just don't allow for that as much, versus I think for Pins, even just as simple as the fact that everyone puts money in upfront and is all invested in the same companies together. I think the kind of dedication and the fact that people are willing to put their money where their mouth is, really kind of just changes how people think about something like this, and their excitement when they get a request from a portfolio company founder, how much time they spend on something per week, their likelihood to show up to events, things like that. And so I think our groups have been historically very different. I think like over time, certainly, I think we'll quote unquote compete more. But we found like that kind of resonates with a lot of groups that maybe wouldn't have started syndicates to begin with because of that.
Yeah, Zara, that's really interesting. Zara, I'm curious, like the sort of flip. It's like if you're an established VC now, and one of the sort of things, I guess, concepts is like if you're, let's say, emerging manager or something like that. It's like, let's say I start by creating a syndicate, or I start by creating, community on Pin. I build my reputation, I build my network, and then do some good deals, and then maybe, I can like bootstrap that into raising a fund or joining a VC. How do folks at Headline think about the sort of unaccredited investing space and from the sort of this like legit VC point of view?
Yeah, I feel like we're very this is an exciting development to me. And when I think about when I first started at Republic in 2020, we were like a pre-seed, seed stage company, and we were constantly fighting for VCs to take us seriously, let alone just VCs to take the companies that were on Republic's platform seriously. And I think that all changed in 2020 because Sahil Lavingia's company Gumroad raised on Republic, and it was the first $5 million deal to ever have been raised. And at that point, you could only raise, I believe it was like 1 million-ish on the platforms. And then the cap was increased to 5 million in 2021. And then Gumroad was the first company to ever raise 5 million through an equity crowdfunding platform. So I think that kind of changed the game. And now, even when I think about kind of where I am as a VC, a lot of my friends when I was at Republic were VCs who worked at like NEA, who worked at Insight, who worked at Andreessen. And the conversations we would have about startups, even me just at Republic, was also always from the perspective of them wanting to meet as many companies as possible. And so I think we finally have gotten over the hurdle that there's this perception of like companies that aren't as good are doing Reg CF rounds. I feel like we fully moved past that. If anything, a lot of my VC friends used Republic and our deal flow pipeline last year as just like a way to keep up with companies, to source companies. And I think even now, I check in with the Republic team regularly to find out kind of what companies they're looking at, the deals that they're seeing. And so I think we've always seen it as just a new way to meet founders. And I think a hierarchy of there should be no hierarchy of financing. Like VC shouldn't be seen as better than debt, and it shouldn't be seen better than an angel round or an equity crowdfunding round. Like, it's all the capital that gets you to build a successful business. I don't think it matters where it comes from, as long as you're able to build that business successfully.
Yeah, that's really interesting. I feel like, well, I'd be curious for Steph what your take on that is, because I feel like one of the, I'm sure you have to deal with this notion of stigma, every day, where someone might be like, hey, I don't want, pin the community to invest because I don't want unaccredited investors like on my cap table, or it might be a negative signal. But on the flip side, PIN has this sort of argument that like, hey, our communities are like, better in some sense, where it's like, Air Angels, the Airbnb alum group, you have, all the Lyft alum group, and then YC founders. And so it's kind of like a different flavor of it's a different flavor of investor than just like, potentially the unwashed masses. I'd be curious what you think about like sort of what should be and what is, in terms of like the hierarchy of like the quality of capital.
Yeah, actually, it's funny. That exact problem is what we were trying to prevent, which is like, to your exact point, I feel like there has been a stigma around taking unaccredited investors in the past, or frankly, like taking money from like non-institutional or, A+ angel investors or whatever. And so I think that was actually our concern. Like, I remember originally we were playing around with, okay, do we just have all the companies in our class literally open these like Reg CF rounds or syndicates or something else? And, besides the unaccredited piece of it, people didn't want to, because of that, not only the logistical work, but the stigma around it. So that was actually like a big driver of like why we structured PIN in the way that we did, because we wanted to specifically set up incentives in a structure that allowed for the best founders out there to take money from these groups without any sort of hesitation around whether it's signaling risk or other things. And I think why it's been so effective for us is, again, we're really focused on communities that have a strong sense of purpose or reason to not only like be investing together, but to invest in the companies that they're investing in. And so for us, usually like there's very little kind of hesitation there. It's like, you're either part of this community yourself and you want to kind of give back to it, or these people have already helped you so much, which is like in our case, the Stanford group or a lot of the founders groups that we see. Or it's like, early Coinbase, that was one of the other early company groups that kind of came onto PIN. Crypto companies were so excited about that, right? Because you have a bunch of these early Coinbase employees who have expertise across product, security, tech, business development, whatever it is, all under one roof, that you can take a check from very, very easily, alongside a round where you already have institutionals, angels, et cetera, but serve a very kind of different need, whether it's literally like amplification on social media, or helping you crowdsource a great hire, or literally finding someone within that group that has an expertise, or feedback that could be helpful in a new product launch, things like that. And so we've been fortunate to not have as much of the kind of adverse selection issue, just because of the way that we kind of designed everything up front, and then the curation of the communities themselves.
Yeah. Do you maybe start with Steph? I'm curious for if both of you, Steph and Zehra, when you talk to founders, what advice you might have for them? Let's say like sort of your typical founder, or your maybe high flying founder who's doing really well. Is the advice like, hey, for example, like for your Series A, like I noticed Encore, the founder of Carry, they just announced that they raised $10 million, and that they're also, I think, opening up a small Reg CF alongside for unaccredited investors. Is that like, is that sort of like, hey, when you do your A, like open up a little bit for at the same price for accredited investors? Or is it, what type of advice might you give founders to sort of maximize like both, their control, the quality of capital, sort of like optics around their round, but also maybe incentivize people to participate, get excited about the company, and like sort of be in for the long term? How do you talk to founders about that?
Yeah, I mean, I love telling founders that this is like absolutely an avenue they should consider. I think we're already seeing it happen with multiple Series A and Series B rounds. I mean, Beehive did they did a 5 million raise on WeFunder, I believe, and I think it's also it was either a million or 5 million. But it was interesting because their Series B was such a huge monumental deal with like NEA, which is also such a respected VC firm. And then as part of the Series B, they did do this Reg CF equity crowdfunding just to get some of their newsletter writers who aren't like accredited investors the opportunity to be part of Beehive's success. So I think we're absolutely seeing this become a trend. If anything, I used to tell founders it was something they should absolutely consider or do 2 to 3 years ago, and it was met with a lot of hesitation. I think now, if anything, there are multiple Series A fundraisers happening right now in consumer tech products, and every single founder I talk to is telling me that from a lead perspective, they're telling everyone we want to do like an RUV, an SPV, or a Reg CF round. So I think it's becoming industry standard. And I think part of that is because at least my angel investments tell me, even if I'm like the smallest check in an SPV or an RUV, typically I think the angel investors are the ones that are the most vocal, the most helpful, always there to like bounce ideas off of the founder. And I think that has just become kind of like, oddly enough, industry standard, not necessarily specific to Reg CF, but I think specific to the notion of having like a group of investors investing as part of a larger Series A, Series B round.
Yeah, that resonates a lot. For me, I think the biggest, especially now being on the founder side of things, I have realized like one of our biggest like advantages is like our cap table, right? And being able to tap into a huge group of people who are literally incentive aligned to help you and want you to succeed. Because especially at the early stages, I'd say like less so maybe in the future stages. And I say this more from, having been at NEA, like working with like a Series D company versus working with like a Series C or Series A company, like you naturally have much more impact at the Series C and A where things are so much less uncertain. They literally have less staff and resources. And so when I talk to founders, especially at the earliest stages around how to set themselves up for the most success. Like I think actually forming your cap table when you're fundraising is incredibly important. And so everything that you mentioned, Zehra, is something that resonates with us. And I think for us in regards to PIN and why we're passionate about what we're doing is that these groups are already kind of curated around something that usually these people need or understand in the same way that you go to business school to kind of build out your network so you can tap into this huge group of expertise when you need something. For us as well, it's very similar, whether it's tapping into a group of your founder peers or a group of people in your industry who have expertise that would be helpful for you or whatever it is. And so we see that kind of in the future as being where the world is going. And we want to essentially build a marketplace, if you will, of like a bunch of amazing pins where regardless of what you're building, there's at least one, if not multiple communities on our platform that would be amazing kind of co-investors alongside a traditional institutional round or angel round or party round or whatever you're doing.
Yeah. I'd be curious to hear, like it for you, Steph, for PIN, are you imagining, sort of everyone in the world participates in some kind of investing community? How do you think about scale? I'm just curious about this. Maybe this is too granular, but just in the context of what Party Round tried to do, which was, it was sort of like a wedge into like building a sort of financial services stack, around banking and otherwise. How do you think about that at PIN?
Yeah, I mean, we certainly are starting off with kind of the most obvious groups, if you will. Like if you look at kind of like the suite of people who are on our platform, they're probably not all that surprising, right? In the sense that they're, the top business schools, growth to, exited companies and their alum groups, founder groups, or VCs that they're forming communities of people who are co-investing alongside them. It's very tech-centric right now. I think it's only been in like the last half year, I'd say, that we started seeing more people who are, again, outside of tech, but still have this expertise to really give, whether it's kind of like the climate groups that I mentioned. We're seeing a lot of like biotech science, gaming as well, where we're seeing more of those interest groups who have opportunities to kind of get involved and help startups that are kind of growing in this area to really form their own communities. And we kind of see that like that's like where the future of the world is going. Like we're obviously so concentrated right now on kind of bringing on the people who are the most obvious to use our product. But kind of even in the same example that you mentioned earlier, Zehra, like there are so many amazing people out there who would be exceptional investors for the next kind of rising beauty companies, for example. Like imagine a group of like influencers or makeup artists or, retail experts or whatever it is. We just genuinely think that more companies in the future will be funded by their community members or industry mates, et cetera, rather than being subject to the fate that they might have if they only had institutions to lean on or angels to lean on. Like we view a world in the future where like more people are almost like, not only funding, but really kind of supporting companies that they personally are users of or would be closely affiliated with that might not otherwise get started without it. And so we're starting off with the most obvious group, but our vision is kind of much bigger than that, to your point.
And in that context, I mean, Zehra, I'd be interested to hear what you think. Are we talking about really mostly consumer companies, or companies with some, sort of broad, sort of consumer interest? Our slight irony being, I think the number one equity crowdfunding campaign that I invested in was Customer.io in terms of like how well they're doing.
Yeah.
And but it was interesting to see the contrast between like the interest in Gumroad and the interest in Customer.io, because Gumroad was a little more accessible, like creator economy company. Customer.io, like a little harder to understand, email automation, yada yada, but like a really strong business. But I'm just curious, like is the sort of future really long-term trajectories, like we're really just focused on like consumer-esque businesses when we talk about like unaccredited investors investing, or is there a world where like hey, like we're all going to be like fantasy football, but like with Customer.io and like Braze and not Amplitude, but like Mixpanel or something?
Yeah, I mean, I think that's a fair question. I think this also goes back to like our perspective as like VCs in terms of what feels accessible versus not, or what feels more consumer versus like a true like B2B SaaS business. I think fundamentally all of the most famous or like the most like best performing companies from Reg CF raises are all B2B SaaS, like Beacons AI, Gumroad technically, Beehive technically is like subscription for newsletter writers. So even if these feel like consumery tools to us, at the end of the day, these are like businesses. And I think even with Customer.io, like I would bucket all of these companies, including just like the Gumroad, Beacons AI, Beehive, into the same category. Same with Mercury raising on WeFunder too. Like fundamentally, they are B2B. I know they're launching a consumer product first, but they are B2B when they did their raise. So I think if anything, I think there is a misperception that a company has to be consumer. If anything, my friends that have like no visibility into VC as an ecosystem, they consistently say, I would only invest in a consumer brand if I knew it was like ripping off the charts, not just like to invest in a consumer brand just because they understood it. So I also think back to the notion that the consumer companies that end up doing the best on Reg CF platforms are the ones that, similarly to these B2B companies I listed, are just like killing it in terms of revenue. So I don't know. I think it's a misconception because people understand the opportunity in B2B, but I also think like consumer is going to be the easiest like gateway to investing as like a first step for people who aren't in VC and aren't in this industry. So yeah, that being said, I think it's always going to lead with consumer as probably what people feel initially comfortable with, but then kind of the numbers have shown that there is a lot of enthusiasm towards just B2B SaaS when it comes to Reg CF.
Yeah. That's interesting. And also, I guess probably the rise of some of these AI companies. Hard to understand maybe some of these AI infrastructure companies, but people are really excited about them. So yeah, Steph, do you have like any sort of insight into the sort of like underlying companies and that people are investing in, and what is sort of interesting within this sort of paradigm of investing?
Honestly, like probably nothing super unique versus what you guys were seeing. I mean, definitely interest in AI at an all-time high, and that's like universal across all of our groups, regardless of how they've come together. But I think actually, I just am I'm touched by the trend of seeing people be more and more excited about investing in their kind of friends and people in their community as well. Like personally, like I've made a small handful of angel investments in some of my close friends, and it's been I mean, too soon to tell financially if it's been rewarding or not. But regardless, I think just like the camaraderie of being able to say that you're an investor in someone and really kind of put your money where your mouth is. And, it's just a different level. And vice versa as well. The few friends that I've allowed to kind of invest in us too, it's like I take that. It's a huge honor, you know what I mean? And kind of Zehra, to your earlier point, it's like not about the check size. It's really just about kind of like the signal of what that means and kind of like a mutual commitment to kind of riding this journey together. That's just been incredibly rewarding. So I really love seeing that as a kind of overall trend.
Yeah. It is fun to invest in your friends for sure and to support them. And it's also the sort of like regret minimization, because if your friend, becomes a multi-billion.
That's true. Exactly.
Yeah, it would be a little embarrassing to be like, oh yeah, I passed. Yeah, well, I invested in one of my friends' companies and it was kind of like actually the company was kind of like coming near its end, but they were like going to do one last hurrah. So I wrote a small check, and then the company shut down. But it was like a hardware company. It was a bike company. So my friend just gave me a bike. So it was like an e-bike. So it made up actually basically more than made up for the loss in the investment. So because it was like a $3,000 bike or something. So it's pretty sweet.
There we go. Worked out.
Yeah. Do folks can you do secondary on PIN? Like, can you be like, hey, we got this like one of our members of our community is like an employee at OpenAI. Like, let's all buy some of their stock.
Yeah, that's a great question. We have not seen that yet. We have seen, which actually, funnily enough, it was kind of a big part of our original vision, and I think still in the future is something we're excited about, although have deprioritized now, which is like people selling part of their stakes on PIN actually. And the biggest use case for that was like people would miss, even in our case, for example, like the Stanford case, we had to cap essentially the number of people at some point, or like close the official round, and then people felt FOMO afterwards of not being able to participate. And so people have sold parts of their original stake, or investment in pins to other people. We haven't seen secondary investment as much, but yeah, maybe something to explore.
Yeah, definitely. We at Zehra, we publish research on mostly focused on pre-IPO companies, and the search volume, is we rank pretty well in search, so we get a lot of search volume around like OpenAI and Anthropic, even sort of some of these more obscure names like CoreWeave or like Lambda Labs. It's interesting. I feel like for example, NVIDIA it has become like a household name, even though it's like kind of like hard to understand. I mean, it's easy to understand what they do, but sort of it's still like not a consumer product if you're not a gamer. But it's like definitely eaten up the mind space gotten into the mind space of the ordinary consumer.
Yeah, absolutely.
I'd love to hear sort of just kind of like open-ended question, like what does the future look like of the unaccredited investors? Is it like, do we believe still like, hey, the future is like retail, or are we kind of like dialing back our ambitions there? What do you both think about that?
I think the future is really kind of emblematic of what Steph is working on, because I think with PIN, with like, if I'd say AngelList focus on accredited investors, what they did really well next was kind of branding like the RUV, the syndicate lead, like making that a thing. And then I think Republic and some of the other equity crowdfunding platforms really nailed down like this non-accredited investor just opportunity. And I think in general, the third wave is going to kind of be individuals, kind of like what we were referencing before, who are able to curate communities of like-minded people to be these powerful mini groups, literally exactly what PIN is, and to curate these investments. And so I feel very bullish that that's kind of what we're going to see next in the ecosystem. And then like phase 1 and phase 2 with like the hyper curation and the really well branded products, I think are all going to kind of amount in phase 3 in a combination of accredited opportunities, but then also even non-accredited opportunities. I think there's just a lot more that can be done in that space, and I feel like Steph is at the forefront of a lot of it.
Oh, well, thank you.
Nice.
Much more than that. Yeah. No, the only other thing I was going to add, I feel like one of the major criticisms that people have when they talk about kind of unaccredited investors or retail investors in general getting involved with private investments or startups is like, oh, well, like there's such little information, and such little transparency compared to the public markets. And it's always so interesting when people say that, because in my mind, I'm like, 99% of people, whether, you look at GameStop or other kind of situations to outline this, like, don't look at the public statements of these companies. It's always FOMO driven or not always, but there's a lot of non-rational, non-financial reasons that people make investments, even in the public markets where you have more information. And I think the cool thing about startups, especially, venture capital and angel investing, et cetera, is there usually is like a deep emotional reason for people to want to invest, whether it's like they have an expertise or a deep care for the person that can actually help them, or they just really align with the mission or other things. And so I'm also really bullish on just seeing that play out in this world where, of course, like I think I'm very bullish on this asset class in general, even just looking at kind of like the high level returns it's driven over the last decade compared to public investing, and just generally think as a principle, like that should be available to everyone. But two, also realizing like there are tons of reasons why people would want to invest in stuff that aren't just purely financial. And so I find that criticism to be kind of frustrating sometimes, and think that, I'm just excited about kind of allowing more people to invest in the companies that they want and support them, both as investors and consumers.
Yeah, I'm interested in, and especially how Republic has done it, because Republic, now I don't even understand what they do, because they have, equity crowdfunding. They have like this like special tier for like, they're like big investors. They do crypto. They have a cryptocurrency. Is the future sort of alternatives, where it's like this mashup, where it's like it's like basically, instead of thinking about it from the perspective of like unaccredited investors, you think about it from the perspective of like, we have a bunch of like people here, like let's sell them, let's like help them deal in all kinds of crap. Obviously, ideally it's not crap, but how do you think about this sort of hybrid world of like all these alternatives, or versus like sort of like a single-minded focus on like unaccredited investing in like private companies?
Yeah, I mean, I think it's such a fair point. I feel very bullish on whoever decides to just stick with unaccredited investing and just bring that to fruition and continue onboarding new users who aren't out of the VC, like are out of the VC ecosystem, kind of like I had already said. I think WeFunder, of course, has been doing a lot of like really competitive deals, like they did Beehive's Series B, Reg CF. So I think there's a lot to kind of be observed there. I think whoever does Reg CF and non-accredited investing opportunities the best is going to be the winner, in my opinion, because I think that focus is super important to continue going forward. I'm not sure who that's going to be right now, just given how competitive the ecosystem has become. But I think Republic was so monumental, I think, from the jump in just getting VCs to take the industry more seriously as well.
Yeah. I'm impressed with WeFunder's evolution, because I felt like they were like a kind of like second-rate Republic, but their branding has gotten a lot better, and they've gotten a lot of these competitive deals, like you mentioned, Beehive. The other one that stands, I think they did Vercel, and also I think they did Mercury, right? So it's like it's some pretty good names there.
Yeah.
Steph, what do you think about this sort of like hybrid approach versus like the focused approach?
It's hard. Well, I'll say I admire how quickly they've been able to do that, just because even just from our experience, we get reached out to all the time about people who want to use some kind of like community-oriented structure for investing in a lot of random things, whether it's like real estate or crypto stuff that we can't touch, or other things that who knows what they bring to the table. And it's tempting, I'll say, but just in the few times that we've even dabbled exploring that, it's all this stuff is so like logistics, legal, tax heavy that even just like getting our best ops forward on this kind of main product that we're doing, let alone all this other stuff, is just incredibly impressive. So I'm inspired. Hopefully one day we can emulate something similar.
Yeah, you'll get there. Cool. Yeah, I'd love to. Yeah, just like I don't know, any last words, parting words, parting advice for our audience, and how can folks reach out to you and chat with you?
Yeah, I think my parting words would be I think remains to be optimism in just like the accredited, non-accredited investor space as individual investors. Like I said, 8 years ago, the fact that you couldn't even as a non-accredited investor invest in private companies was crazy. But I also think about like 4 decades before that, VC had just been invented, and there was just this nascent industry that was really emerging. So I think it is crazy the amount of progress and accessibility we've seen in the span of not even a century yet from this ecosystem really developing. So I always like to remind people of that. We're still very early on in the story. I think it's going to be really interesting to see where this goes. To get connected with me, you can just search up Zehra Naqvi on LinkedIn, and then also on Twitter. And I have like a few links, link in bio. I should probably use Beacon's AI for that. But yeah. You can get connected with me there.
Yeah. That's great. Yeah, no, that's good stuff. Yeah, Steph?
Yeah, I don't have any final last words. I think that was incredible. But yes, find me on LinkedIn, Twitter. Steph Mui is my name. And also I'm a Beacons angel investor. And I'm a Beacons user as well. So definitely I'll give them a shout out as well. You should definitely use Beacons.
Sweet. I'll check out your link in bio. Awesome. Yeah, that's also getpinned.xyz for folks. Sweet. Well, Steph, Zehra, thank you so much. Great to get your insights on this stuff, and grateful for you guys both to come on.
Thank you so much.
Thank you for having me.
Cool.
See ya.
All right. Thanks everyone for tolerating Adam's absence. And yeah, come back next week for more live events. All right. See you.